Good morning, welcome by a new episode of The Wrecked Show. This morning we'll be doing a small market update as we've got the live stream tonight. And there we're going to discuss everything regarding the markets and also a slightly view of opinion regarding the sushi listing on CZ, as I'm seeing tons of toxicity towards me and some really good replies as well. So we're going to discuss that tonight. If you like my content, please subscribe to the channel, follow me on Instagram, like the video and check out my website if you want to trade alongside me. We've launched the website last week. First, as the market dropped, we see a lot of discussion regarding CME gaps. And as we see, we've got two. As we can also see, CME futures were opened last night, so that's great. But we've got two CME gaps. One we do have, and the clear obvious one is between 9.7 to 9.9, and we've got a slight one between 10.4 and 10.5, as you can see. So these are the two gaps that people are focusing on. The one that we've had for a long time already, and we are most likely getting a close with later on, and the one we've got above us at 10.4 to 10.5. Then why I'm focusing on this is that people are still questioning why these CME gaps are relevant for traders. Let's make it this way. If 90% of the traders are focused on using support and resistance levels, they will trade accordingly to them. So because of the majority of the people trading accordingly to them, they become relevant and the price will react to it. So the CME gaps is just something, a tool that is used for the CME. So for during the weekend you can't trade. That doesn't change much to the price, but because of these gaps and the relevance of them in the history and also in the legacy markets, it's being used as a narrative and indicator or variable to trade for support and resistance levels, because the majority of the people do so, and that's why they work. Nothing more, nothing less. Alright, so that's what I wanted to share about the CME gap. Then we can come back towards the price movements. As we can see, oh, this is the wrong one. Where's the right one? There we go. As we can see that we are going to try to get that 10k support level going. Seemingly we are not getting it completely. As I've discussed, the range that we want to see hold, I'll just get a completely clean chart. That's maybe better. The level that we want to see hold is the area between 9.9 and 10k, around 10k. This is the area you want to see hold. We clearly reject again at 10.3, just like we did at 10.6. We got a slight downwards momentum, as we know. I've also tweeted this about BNB previously. The area that you want to see hold for Bitcoin is the 10k zone. If we do hold here, bounce back, consolidate and break the downwards trend, it's very likely that we're going to see a rally towards 10.6 and might be even go towards 10.9 to 11k. Overall, you're still trading against the trend, right? So the trend is down, which means that if you want to look for a long opportunity right now, you want to search for a slightly more confirmation before taking it. So for instance, if we get this consolidation, you get that long entry, but you're not going to long above the high of above the bounce already. You're going to be more cautious with your longs, and especially if we do make the bounce up towards 10.9 to 11k, or at least 10.6 to 10.8, it seems very likely that we'll be coming back down later on to confirm any bottom structure in general. So then still you'll be very cautious in letting those longs run, as the momentum is still down. So the bullish case for now is that we hold this 10k zone, bounce back, consolidate, break this slight downtrend, just like we have seen on BNB. And then you can see targets like we've discussed here. If we do lose the level, obviously the one that we want to see, which might be a very fast wick down, is the 9.6 zone, which is the CME gap. So then we get another drop down, probably get higher time frame bullish divergence going on here, immediately wick back, get a slight consolidation, and then the breakout should occur. That's also a scenario that I'd be looking at. And then you're definitely not going to look for falling knife to catch them. But if we bounce back, you're going to look for that higher low construction, in which we are trying to do the exact same thing right now. Yes, you can start scaling in slowly, but I would not be advising anyone to, like we discussed yesterday in the video, to place 100% of their portfolio in an order of 9/6. That's just not the way how you should trade. BNB USDT, actually the similar structure we've discussed in the trades yesterday, held the previous level for support, which is similar to what Bitcoin is trying to achieve right now, broke up, and now trying to clearly hold the range low for support. We did hold the 2150 level, made another bounce up to 2350, which is a resistance zone. We have been pointing that out here. Came all the way back down, now fighting for support. Trend is south, so you want to see more confirmation before taking any. Might be going down towards $21 before we bounce back up and continue to move. But this is a structure that I'll be looking at with Bitcoin as well. And a breaker could be definitely very nice. ETH/USDT, similar figure. We came all the way down towards one of the areas that I've been pointing out as very interesting. We've bounced from there, and now we've got a slight structure, a sideways structure going on, in which we reject the resistance level at 356. Very likely that if Bitcoin goes to 9/6, ETH goes down again towards the range lows. We might be even going towards the next level around 280, as I've discussed. If we do get such a structure in which we drop down again, you're going to look at the bullish divergence, which can be planted on the 4-hour here. So then you're definitely looking at any of these levels beneath, and you start be looking at longs at 320, and then just scaling in, as this wick might be very fast, just like any of these bottoming structures. And then they quickly bounce back up, and the rally continues to the upside, in which 360 and 380, 385 to $400 levels are interesting to watch for potential resistance zones. If we do hold the 330 level, that would be very nice and confluent with the range low. The overall crucial area to hold for Ether without going further down towards new lows is the 325 level. So if we get something like this, it seems very likely that we'll be breaking back up. Eyes on Bitcoin, eyes on Ethereum. If Bitcoin bounces up, altcoins will bounce 25 to 50%, and that's going to bring you back on the levels you used to be, and then you should be start to trading a little bit more. Thank you for watching. I'll be back tonight with a live stream at 8 p.m. GMT +2. Check out my website, subscribe on the YouTube channel, follow me on Insta, and thank you very much and have a wonderful week.